I think gold and silver will move up independently of these geopolitical conflicts. Certainly, there's always that added reason to own gold in the face of geopolitical conflict. But if you look throughout the years, very often when a war breaks out, they hit the price of gold. That the commercial banks will short the price to delink the rationale people would have for fleeing currency and moving into commodities. It's been doing that forever and ever and ever. So I don't look at that as being as big of a driver as much as the inflation, the lowered interest rates, the weaker dollar.
I think we have to dismiss, for the foreseeable future, any idea of a return to a gold standard currency. Having said that, of course, Russia and China and others in Asia have been accumulating gold as part of their reserves, and also, I guess, in their wealth funds and various government accounts, which we're not privy to.
And then he comes out a couple of days ago to say he's going to slap 100% tariff on any BRIC nation that challenges the dollar's supremacy, the king dollar. Any nation that doesn't kiss its ring and take its toilet paper called the treasury bill for payment regarding gold-backed dollar. Okay, notice that no role has been assigned or selected or picked for Judy Shelton, the gold advocate. And I think she's going to have an advisory role. That's what I think is going to happen.
I don't own gold because I think it might go from 2,600 to 3,000. That's why I don't own it for that reason. I own it because I'm afraid it's going to go to 10,000.
In today's episode, three financial experts, Andy Schectman, Jim Willie, and Alasdair Macleod, talk about their insights and experiences into the world of gold and silver. We watched hours of footage to bring you the best clips so you don't have to. They discuss the latest news on precious metals, from the latest on Brics nations and the global shift in reserve currencies to the future of precious metals amidst economic uncertainty. Hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
To a degree, yeah, it's certainly detracting from gold's appeal. I find it interesting that all you hear is crypto. And at the same time, you find that the central banks are accumulating hard assets, not so much in the way of crypto. It's also interesting to note that if you look at the main trading pair on majority of the platforms like Kraken and Coinbase, it's USDT Tether with Bitcoin. And if you look at USDT and USDC, these dollar-based stable coins, the majority of their holdings are in US treasuries. And so it's interesting. It's as if, on one hand, people are trying to reject the legacy system, the old-time system, and go into crypto. And at the same time, in many respects, they're actually supporting and extending the life of the bond market as much of the world is shedding our treasuries. It's the backing of many of these stable coins, USDC and USDT in particular, that is actually extending the life of the crypto market. Instant gratification, Jesse, evidently is not fast enough for most people. And there's this get-rich gambling mentality on things like Dogecoin. And they have made people wealthy. They have indeed. But I find it interesting that in the end, we see the central banks buying gold hand over fist. And yet the impetus here with the public is into cryptocurrency. When you look at, you mentioned Trump going to the Bitcoin show in Tennessee. He did. What I find also interesting about that is directly after he spoke was Senator Cynthia Loomis from Wyoming, whose proposal to fund that Bitcoin account was to revalue the gold held by the Federal Reserve on behalf of the Treasury to a level sufficient enough to use some of the proceeds to buy that Bitcoin. And so Here again, yeah, I think the Trump trade is very bullish for crypto. I think that it's becoming almost a segue into a digital world, a world that is a world filled with surveillance, a world filled with lack of privacy. People are becoming more and more and more accustomed to these digital forms of wealth. And ultimately, where does that lead to? It's almost like a stepping stone, if you will. It's just becoming more mainstream. Yet at the same time, you look at what every central bank on the planet has been accumulating, and it hasn't been cryptocurrencies. I'm sure there are some that have. It's been hard commodities like precious metals. So you hope it doesn't end poorly. You hope it doesn't end badly. But indeed, yeah, you have a generation of people who have put their faith in these digital assets and largely have done well. But in the end, I don't know how this all plays out. For me, I don't discount Bitcoin. I think there is certainly, you can see that the powers that be are pushing us in that direction. And rather than fight it, I think, yeah, you could certainly make some money by being in these asset classes. But in the end, for me, you take some of that profit and you pull it off the table and you put it into gold, you put it into silver, because as much as the media, as much as the information, as much as the rhetoric is pointing in that direction, don't look so much upon what they say, but what they are doing. And the most well-informed and well-funded money on the planet, their choice has been gold over Bitcoin, whereas the public's choice has been Bitcoin over gold. In the end, I guess we'll see who wins this one and who's right and who's wrong. And it doesn't have to be an either or, but for me, yeah, it's certainly something that is difficult to ignore. I see it, but in the end, I feel more comfortable with physical assets in my possession. I mean, look at Bill Gates as an example, buying up all the farmland. I think it's tangibles in your possession, and I'm not throwing dirt on Bitcoin. I happen to think it's turning into something that is becoming far more viable than I ever thought it would be. I own a little bit of it. I accumulate a little bit of it. But in the end, it does not replace gold. And I think the central banks are showing you that.
Now, Jim Willie and Alasdair Macleod focus on the major drivers behind the Brics master plan, shedding light on the global economic shifts, reshaping the financial landscape. They dive into how these developments impact the dollar's dominance and the strategic moves by emerging economies. Plus, they share actionable insights on how you can position yourself to benefit from these monumental changes.
I don't care if it's AAA. U.S. Treasury bill, I don't care if it's AAA. It's impaired, and it's being rejected, and it's being sold on a massive scale. We cannot force foreign suppliers to take our Treasury bill as payment for finished goods. We cannot do that. And it's not legitimate. And Trump is going to be risking an embargo against the United States. Now, let me give a little preliminary on that. I was told, this is right about the beginning of this year of 2024. It was either December of last year or January, February this year. One of my colleagues, really sharp fellow, said, Jim, have you noticed that there are a lot of super tankers, oil super tankers at U.S. ports? It's like 20 different ports. 20 different tankers are filling up at several different ports. I said, no, what do you suppose is going on? And he said, hard asset credit. They're not accepting the Treasury bill. So we're giving them shiploads, tanker loads full of crude oil for credits in trade payment. Chris, Trump might not have gotten that memo. This is going to get very weird very fast, because foreign nations, starting with Russia and China, are going to say, we don't want your effing Treasury bill. That's not a legitimate form of payment. And I got a lot more to say about treasury bills because I believe that the Ukraine war was launched because treasury bills were rejected at Long Beach, at the port facilities. And I heard that from someone who works at the Long Beach port facility. This is very hairy, very dicey, very messy. We're going to hear from Brics nations who say we need a legitimate form of payment because we're not going to take the treasury bill. If you want to make a big deal about 100% tariff for rejecting treasuries in payment, then we're going to make a big deal about how we've been rejecting them and how we regard them as impaired, if not toxic. And then they're going to start talking about how different measures are going on behind the scenes where the treasury bond is enduring haircuts. There were $2 trillion worth of treasuries. This was a figure that I heard in September. For calendar year 2024, there were $2 trillion worth of treasuries that were dumped, sold, discarded, and had to be redeemed. And this is not some option for the Treasury Department. They're required. They're the issuer. They're required to redeem them. And Chris, I go out on a limb once in a while. I do it again. I mentioned this before. I think the Exchange Stabilization Fund has been tapped, and they're paying back foreign central banks who are dumping treasury bonds in large volume. Why have we not had a treasury bond crisis? Why have we not had a treasury bond shutdown in the market? Something big is going on.
The thing about the Brics summit is it's highly political, and I don't think people really understood just how political it was. I mean, the whole of this business of a gold-backed trade settlement currency started when, I think I'm right in saying, the Russian embassy in Nairobi put out a story that this was going to be on the Johannesburg agenda. It didn't make the agenda. And it hasn't made this agenda. And I think there are very, very good reasons why. I mean, India has reportedly been very much against it. And I can understand that. India tends to be Keynesian in its economics. And not only that, but it trades with both Asia and also the West. And to bring in a gold-backed currency of any sort risks destabilizing the fiat currency world. And India doesn't want to be in that position, nor does China. China has exactly the same problem. And China also has a philosophical approach to these things. She would rather we made all the mistakes, and she just sort of sits there, benefiting from our mistakes. That's been her strategy. It's sort of Confucian, if you like. You know, why interrupt someone when they're making mistakes to your advantage? And that's her approach. So she's just sitting on her hands and not interested. I think the only nation which has a clear benefit from a return to gold is Russia, because if she made the ruble a credible gold substitute, then gold would flood from everywhere. Where, I mean, in the West, its lease rate is 2%. The deposit rate of the Central Bank of Russia is around about 18%. I mean, what's not to like on that arbitrage? And that is what gets gold flowing from one center to another center. And I think, Russia is the only one in the Brics which really has a very substantial and sustained trade surplus. It's not like China. China trades off her imports by exports, and where there's a difference, she'll go and sort of spend some money investing in infrastructure or whatever it might be. Russia is the one with the problem, and that's why she got the hair running, I think, back in Nairobi ahead of the Joburg summit. I think we have to dismiss, for the foreseeable future, any idea of a return to a gold standard currency. Having said that, of course, Russia and China and others in Asia have been accumulating gold as part of their reserves, and also, I guess, in their wealth funds and various government accounts, which we're not privy to. I think the reason for this is really quite simple. She sees that the US is in a debt trap, the US government is in a debt trap, and that debt trap is going to drive interest.
In today's news recap, silver price continues to see buyers on dips. The silver market continues to see a lot of buying overall, as the trend continues to see a lot of pressures to the upside. At this point in time, the market looks as if it is trying to find its way higher yet again. The silver market found itself a bit noisy during the early hours on Monday as we pulled back towards the $30 level again, only to turn around and show signs of life. At this juncture, the market is hanging around between the 200-day EMA below and the 50-day EMA above. With that being said, I think we are in that sweet spot where you attract a lot of attention. The question, of course, is which direction do we go? In noisy patterns like this, it's best to pay close attention to the longer-term trend, as typically consolidation will lead to some type of continuation. Well, as traders, we have to come up with something, and I think a move above the $31.50 level gives me much more confidence in the silver market, as we will have just formed a so-called W pattern. If we turn around and break down below the lows of the last couple of days and then the 200-day EMA, you could see silver fall apart. Ultimately, we are in an uptrend. So understand that you are still looking for cheap silver to take advantage of, as the market has been so decidedly bullish for the entire year, really. If we do break out to the upside, I suspect we will eventually try to get to the 35 level above. If we can get above that level, then we're off to the races, as the market could very well see continued momentum building in this market. Now, we'll show you more clips, but first, check the pinned comment, especially if you're a stacker, as we have a massive Black Friday deal that every stacker should take advantage of. And hit the like and subscribe buttons so you do not miss out our recaps. Enjoy the episode.
One of his readers said to me, "Rick, when is the gold price finally going to move?" I would say to that person, I'd be old and sage, it's going to move in the year 2000. In the year 2000, it was at $253 an ounce. Now it's at $2,600. In other words, it's up, what, sevenfold? Yeah. Gold has increased by almost 8.5% compounded for 24 years. It's done exactly what it was supposed to do. It's protected by purchasing power for 24 years. So when you're asking me when gold's going to move, 24 years ago. What I really like about it from an investment perspective is that it has this wonderful track record, which nobody cares about. The market share of precious metals and precious metal securities in the U.S. market, the market that I know the best, is less than 0.5%. Less than 0.5% of savings and investment assets in the United States are precious metals related. The 4-decade mean, according to J.P. Morgan Chase, not some old bald gold bug, J.P. Morgan Chase, is that the market share of precious metals and precious metals securities over the last 40 years in the U.S. market has been 2%. Gold doesn't need to whip the US dollar. Gold doesn't need to break the treasury market. All it has to do is revert to mean. If it reverts to mean, the market share in the US market grows fourfold. Now, can you imagine what a fourfold increase in demand for gold and gold stocks in a market that controls 23% of the savings and investment assets in the world would do to the gold price? I mean,
exceptionally.
It's a stupid number. Bitcoin is what, a $3 trillion asset class? Robert Friedland describes that as a pimple on an elephant's ass.
Yeah.
It doesn't matter. I mean, yes, on the margin, right? The penny stock moron and the crypto moron are very similar species. But if you look at a global market for savings and investments at the $750 trillion level, gold is a sideshow and Bitcoin is a sideshow. They don't matter. The circumstance that will cause the gold price to move is a circumstance where perhaps Bitcoin can be accommodated in the move too. My suggestion is that they serve different purposes. Right. Gold is a store of value and a medium of exchange. Bitcoin is a network and a transfer mechanism. So I think at their heart, they're different asset classes. Right now, they're regarded as momentum. They're regarded as trading vehicles. I engage in conversations here with people about Bitcoin, and I admittedly know almost nothing about it.
They must love you.
And I would suggest that I know substantially more about it than they, and they're advocates. Despite the fact that I know more about it than they do, I profess no knowledge. The real knowledge they have is that they've watched it go from 1,000 to 100,000. That's the whole knowledge. And the fact that the asset class is up 100-fold, they somehow think makes it more attractive. Now, let's say, are you married?
Almost, December 30th.
So let's say that your fiance went to the grocery store and the price of bananas was up 100-fold. She would be very logical and not buy bananas. But because an asset class is up 100-fold with no demonstrable change in utility, why is that good? This is not a capital short market for high-quality issuers. The problem is in the junior sector, there's not very many high-quality issuers. It's mostly the lame, the halt, and the blind. We've talked about this on Kitco before. If you merge the whole public company universe in mining to Junior Explorco, one company worldwide, merge these 2,500 or whatever they are companies into one, that company in a good year would lose $2 billion. In a bad year, it'd lose $10 billion. So you tell me, how much do you pay to lose $2 billion a year? Should you pay 8 times losses? In a bull market, should you pay 15 times losses? The truth is that if you invest in the sector overall, I'm talking about the juniors, over a decade you will go broke. That's what will happen. That disguises the fact that there's a subset of issuers, perhaps 5% of the total population, that generates so much performance that it adds legitimacy and sometimes luster to a sector that loses $2 billion every year. You pointed out to me, and we'll make the company nameless, a junior company recently was successful raising $2 billion and as a consequence awarded themselves $10 or $15 million worth of restricted stock units for doing nothing.
Yeah.
That wraps up today's episode. We've heard some fascinating insights from Andy Schectman, Jim Willie, and Alasdair Macleod about gold, silver, and the shifting global financial landscape. What are your thoughts on the Brics strategy, the dollar's future, and the role precious metals will play in this evolving story? Do you agree with their predictions? Let us know in the comments below, and don't forget to like, subscribe, and share this video with fellow stackers and investors. Until next time, stay informed and keep stacking.